Welcome back to the channel, guys. Today I want to go over a trade I took yesterday. I took one trade in the morning and just jumped in right after 9:30. I didn't have a lot of time to do a proper pre-market analysis. I just kind of jumped in, looked at the 4 hours, the 1 hour and the 15-minute time frames. There were some fair value gaps that were on the 4 hour, and there was one on the 50-minute as well. And so that was enough for me to look for a decent setup. And right around after about 9:45, I saw a divergence, a bearish divergence being formed. We had a confluence from the MACD crossing down. And you know, guys, I need to do a proper video about this setup. This is one of my favorite setup. I call this setup the divergent gap trade, and this is pretty much where you have divergence, you have a trend line break, and you also have a fair value gap. So it's like three components all in one that makes the trade. So we have a bearish divergence, we have price breaking a trend line to the downside, and then price reversing to test that bearish fair value gap. And guys, I'm looking for this fair value gap to hold. I'm expecting price to go up, test and reject, and the plan is to enter right after the rejection. Your target can be wherever you want it to be. Usually I go for 50 ticks or more, just depending on you know what the market is giving you. I usually put my stop above the fair value gap, and you know that's usually a safe place. If the trade is invalidated, then it's gonna invert the fair value gap. So that's a good spot to leave your stop. So right on here, I'm noting the H4 fair value gap. That's a magnet there. You know, that's an area price you would expect price to try and go back to fill. And then you have that support level, which is also a fair value gap on the 15-minute time frame. And the plan is that area is going to be a short-term target. If the market looks strong, then I just might, you know, extend my target to the 4-hour fair value gap, but we just have to see how the price action looks. So just waiting for this to reject here, or at least not get inverted and close back below that gap for my signal to jump in. And guys, this setup happens every day in the market, multiple times, you know, at every session. You could trade this in the afternoon, you could trade this in the overnight session, you could trade this pre-market or at the open. You know, this is one of my go-to setups. You're looking for a divergence, you're looking for a break of the trend line. You know, usually that trend line is broken with some momentum, so that momentum creates a fair value gap. We want price to reverse back to that fair value gap, test it and be rejected, and then we want to enter once price close outside the fair value gap, right? Once price close outside, guys. And you know, the icing on the cake, if you get a MACD crossing, then that's another confluence you can add to this setup, right? So let's see, we're heading down to close. And once we close, we want to get in. Right there. And we want to get in right there. And we have our stop above our fair value gap, and we're just gonna watch and see how this plays out. And so guys, I'm gonna speed this up for the interest of time. I'm gonna speed this up, but this is where I got in, and I'm gonna move my target up a little bit because this fair value gap, you know, price likes to at least jump to the midpoint of these fair value gaps. It's I don't know how, I mean, it's like magic, right? Price goes to these midpoints at least halfway, and then it will reverse. So right away I'm thinking, okay, let's get to the midpoint. That's a good target for a quick scalp. If I start to see a lot of selling pressure, I'll drag my take profit further down to see if I could milk the trade more. And right here, guys, you see my psychology is telling me break even. But you know, that's something I'm working on, and so you know, I just kind of left that stop where it's supposed to be and just let the trade breathe, and just, you know, not rush into a break even, guys. Not rush into a early break even and kill your profits, because price is gonna always come back to your entry. You know, it's gonna come back because it expects those traders that are trading with fear to break even as quickly as possible, as soon as they can, you know, to take the to relieve the pain, right? Because that's what moving your stop to break even, that's what it does. It alleviates your pain, right? But sometimes you gotta sit in the pain to get that profit, right? You know, it's about pain, guys. It depends on your level of pain and your level of your risk, your level of how much risk you can, you know, handle. And a lot of time that's what gets us, you know, as traders. It's just too painful to sit, especially when you get in a trade and the market starts to consolidate. And the longer it consolidates while you're in that trade is the more pain you're exposed to, right? And so a lot of people cut their losses. They'll just cut the trade in while it's in red and take a small loss, or they'll quickly break even at the first opportunity, right? And then you have the folks that have developed that trader's mindset that just accept the risk, right? And just live with the result, win or lose, right? And those are the guys that are successful. So that's something I'm working on. You know, also be smart about it, right? Especially if you're a small trader, you know, you're just coming up, you don't have a lot of capital to work with. You know, the bigger guys that have multiple streams, you know, can blow 3, 4, 5 evaluations, no issue. But you know, you're a small trader, you've got to manage your risks a little more, and at the same time manage your mental. let's see. Price wanting to grab that, take out that fair value gap. And right here, you know, we form a second candle below my entry. I felt it was a good spot to go to break even. So we're at break even. No more pain, guys. Of course, you never really alleviate the pain, because if you get stopped out here for nothing when you could have taken 400 out of the market, that's still some pain, right? But you get to move on. You get to try again. You know, you don't lose your account. And right here, I'm just like, you know, let it sit at the midpoint, because price love to go to these midpoints, guys, of these fair value gap. And there it is. That was the trade. That was $590. And just look at how price reacted to this 50-minute fair value gap. It immediately wicked out and reversed. So that was the trade, guys. 590, just one trade on the day, and I'll take it. Okay, guys, stay tuned for more analysis, more setups, and let's continue growing together, guys.